According to supply managers in the 9 MidAmerica states, how is the economy performing?
Our April survey of supply managers, manufacturing supply managers in 9 MidAmerica states was not good for the month. The overall reading moved to 35.1, well into recession territory, and that's down from 46.2 in March. So this was the April reading was the lowest since the recession of February 2009. And I think when the dust settles, we're going to see quarter two numbers, the decline. Well, actually, the decline in quarter two is probably going to be larger than what we experienced in 1932, and that was a 13% decline in GDP. Now that's on an annualized basis. So again, this is before we're seeing an impact. We haven't really seen the positive impacts of the Federal Reserve's stimulus plan, nor have we seen the positive impacts of the federal government's CARES Act. So that will reduce some of the impacts, but right now we're solidly in recessionary territory for the manufacturing sector. And here I'm bringing up the figures showing the MidAmerica, the number there in Creighton blue. It's down to 35.1. The national number in red there will come out later on this morning. The last number was 49.1. And that's for March. In March, we had not really seen much of the impact in the manufacturing sector. We are now seeing it in the manufacturing sector, and we were seeing it in April, and we'll see it again in May, and we'll see those results on the first business day of June.
What were the hiring trends?
Hiring was not good at all in April. The overall reading was 26.2, and that's a record low for the MidAmerica region. A record low. We began the survey in 1993, so that's spread across two recessions in the U.S. economy. And the major Great Recession of 2008 and 2009, this was a record low, again 26.2, down from March's 34.7. 6 of 10 employers in our survey reduced employment due to the COVID-19, the virus, the coronavirus. 63% of the firms reported worker absences. So not only did they reduce employment, but there were worker absences because of the virus. So it was a troubling time for the regional economy in terms of hiring, in terms of the overall employment level.
What impact is inflation having?
Inflation, the numbers indicate deflationary trends in the wholesale price index. The overall reading for April was 44.0. That's down from from March's reading of 55.2. And this April's reading of 44.0 was the lowest since the recession of May of 2009. And this simply reinforces the Federal Reserve's position on stimulus. The Federal Reserve, because of this deflationary environment, we're going to see the Federal Reserve continue to place his foot on the pedal, the gas pedal, the fuel pedal for the regional economy and for the national economy. So that's what I'm expecting.
What is the impact of coronavirus on the economy thus far?
1/2 of the businesses reported business stoppages, vendor stoppages. So the companies they buy from, 1/2 of them were business stoppages there. 52% of the supply managers reporting shipping problems. So there's difficulty in getting shipments in and shipments out to the businesses that we survey in the 9-state region. 52%, an identical amount, reported canceling business meetings. No surprise there. So we're seeing the impacts there, and that's spilling over into the travel industry. That would be airlines and other travel industries dependent on travel. 1/3 reported difficulties in international buying, and no surprise there. That will continue in the weeks and months ahead. And as a result, when you look at the April export numbers, the number was 19.4 for exports, and that's down from 34.1. Again, these indices range from 0 to 100. These were well below growth neutral. The import reading, however, was up. It was at 38.8, and that's up from March's 32.7. All in all, it was just all of the numbers really reflect a manufacturing economy that is just in recessionary territory.
What does the MidAmerica economy need?
The MidAmerica economy, like the national economy, needs a vaccine more than it needs the stimulus. Although we're getting the stimulus from the federal government and from the Federal Reserve, that is essential right now. We need other action that the president can take unilaterally would be to reduce or eliminate some of the tariffs we're seeing. That's really increasing the price of imported goods, and the consumers that are buying are seeing higher prices, at least for some of the services and goods they're purchasing. So we need elimination of tariffs. Of course, again, we need the lockdown. I think we need the lockdown in the states to remove that lockdown. Right now, the economy is suffering more for the lockdown and the economic downturn than it's suffering from the coronavirus. So that's something else we need. And I think we're going to see the states move to open up the economy, the 9 states that we survey, in the weeks and months ahead.
What are some areas of risk that we need to monitor?
Well, watch for the opening of the economy, of the state economies, and how the infection rates and the death rates in the state economies of the states. If the death rate should rise significantly or substantially, that would be a troubling factor and could move the governors to close down the economies again. That would be a bad move. So watch those infection rates, those death rates. Keep an eye on the 10-year Treasury. That's the most important indicator of investors' assessment of risk. When investors move into that 10-year bond, it increases the price and reduces the yield. When that yield is now between 0.6 and 0.7%. If that should move back up to above 1% and then move up to 1.5 to 2%, that would be a very important and positive indicator that investors are seeing a better market, an improving economy. So that's important. On May the 8th, the April employment report, very, very important. We did not see it in the last month's employment report, that is the full impact of the coronavirus. The May 8th report, which is for April, we will see some of the full impacts. Keep an eye. That's going to be the largest decline in employment for the U.S. economy that we've seen, I think, probably since the Great Depression, I should say. Look at first-time claims and continuing claims and first-time claims for unemployment insurance. That's released every Thursday. The next report will be on May the 8th. Those rates right now are over 10%. So we're seeing unemployment levels in the 9 states, among the 9 state regions we're surveying, between 10 and 15%. So that's very troubling. I expect those to continue to increase. That's continuing claims. First-time claims may come down, but the continuing claims will continue to grow. Keep an eye on Creighton's Rural Main Street survey that comes out on May the 22nd, and that's a report on the rural economies of 10 states. That number last month, that was April, reached a record low level. I don't expect it to improve much for the month of May. I do expect it to improve. That's something definitely to keep an eye on. Importantly, crude oil prices. Crude oil prices are now between $16 and $20 a barrel, moved into negative territory portions of the month, last month. And keep an eye on that. We're moving right now. The ethanol producers cannot produce at these levels, these oil price levels. So we need to see those prices move up because of demand. That would be an important consideration. When demand improves, and that would be an improving U.S. economy and improving regional economy. When those crude oil prices move back up to $30 a barrel, hopefully to $40 a barrel, that would be an important indicator that the regional economy and the U.S. economy is improving. So those are our readings, those are our numbers for the month of April, and until we meet again on the first business day of June, may your economic cup runneth over, and thank you.